Hello, my name is Brett Villaume. I'm a board member of the Market Technicians Association, and I'm here joining with me is Charlie Kirkpatrick, and I'm very pleased to be able to interview him. Charlie is a longtime member of the MTA and an important figure in the technical analysis community for several reasons, and I'll let him introduce himself right quickly, and then I'm going to ask him a few questions. Charlie, tell us about how you got started in technical analysis and some of the important developments over the course of your career.
Well, I got started, my father used to run funds for Fidelity, and when I was 14 years old, I used to plot his charts. He used point and figure charts at that time, and that intrigued me in the subject, and from then I went on to going to the New York Public Library and other places and reading up as much as I could on different aspects, and just seemed to grow over the years.
Now you've been a money manager for a long time as well, and been quite successful at it with a very long track record, if I'm correct.
Yeah, it's not really money management in the sense that I don't run money. I run my own, of course, but I got out of the public money market because I had a hard time describing and reasoning with people what I was doing and why. Uh-huh. But so I published a letter, and the letter has in it a hypothetical portfolio that's run live since the late 70s. Okay. And that's been very, very good.
Do you feel as though the majority of your insights in technical analysis and your work has come out of just your own thoughts, or have you had major influences, some predecessors that inspired you to take certain directions in technical analysis?
Well, it's not that easy. Of course, you read other things, you talk to other people, and you get ideas as to how to approach market prices, and so then you go back and you try, fool around with them a bit, experiment with them, and if they show some promise, well, you continue, and if they don't, you go on to the next new idea. Mm-hmm. So I still do that. I mean, that's not something that I stopped.
Okay. One of the things that I wanted to ask you about was your background in systems development and testing. You're well known for it and have done a lot of work, especially you focus on walk-forward optimization. Tell us a little bit about your experiences in that regard.
All right. Well, as a technician, you come across indicators all the time, and there's a lot of myths and there's a lot of suppositions that aren't necessarily true. So I've always believed that you want to know, or from a confidence standpoint, as to whether the indicator works. And the only way to know that is to test it yourself. And then when you find, and the way you ask about testing, the way I do it is I usually optimize the parameters involved in the indicator, and to see which one gives the best result, least amount of risk, and so forth. And then if that all works out and it seems like it's a reasonable approach, then what I'll do is called walk-forward optimizing, which is taking and calculating over short periods of time and having those short periods of time project into the future and then take the next leg and the next leg and so forth. You're sort of simulating if you'd have just started it from today and run it into the future, but because what you're doing is you're using new data each time you do it, so it's not having it hasn't made it what do they call it, I've forgotten the term, but it's like data mining. You're not
curve fitting.
Curve fitting, right? Yes. That's exactly right, and that's the last thing you want to do, because that just doesn't work.
Exactly, and over time, models break. And,
absolutely.
That reminds me of something that we covered last night in the Legends panel, but also in your lecture today. You said that there's no universal indicator for all markets, and doing the statistical test proves that out, I'm sure.
That's right.
Elaborate on that a little bit. Have you fallen in love with certain areas of technical analysis only to later find out that you could tweak it, or it wasn't as wonderful?
Yeah. And of course it depends on what markets you're playing, because I've found that you start with a standard formula, and then you start optimizing the parameters of that depending on the length of time that you're looking at and what the vehicle is, whether it's a future or a commodity or a stock or an average. and then you come up with some kind of optimized result, and you'll find that almost never is that result the same for 1 and for 2 and for 3. They're always different, which is telling you that different markets behave differently enough so that you've got to specialize. And so I'm very much against using a standard formula for everything. It doesn't work.
It sounds to me as though you believe that there's a lot of hard work that goes into technical
Oh,
analysis.
no question. It's the old 10,000 hours to be.
Yeah. You said also you believe that top-down is a flawed philosophy of or at least stock picking. Explain that, because that's a very popular way to analyze markets and ferret out stock ideas.
And it depends on where you start at the top. I mean, if you're talking about the economy and so forth, I've never met anybody who could predict the economy, so you're off right there. If you start with the market in general and then work down, what happens is you've got to divide it into sectors and industrial, different groups of stocks. Those groups are defined by humans, and oftentimes you'll find that a stock behaves in one group and not in the other group, and so you're sort of trying to mastermind it, when to me it's much more sensible to start right at the beginning and look at all stocks. I mean, after all, you're playing the stocks, you're not playing the sectors. And then find out from this large group of stocks that are trading which ones are the best. And who cares what industry? I mean, you'll see a pattern come out when it gives you 5 pharmaceuticals or something.
Right.
You know that's, but you came at it from a different direction.
I've heard other technicians say that they can understand what's going on with individual sectors much better by scrolling through hundreds of individual charts and seeing all the patterns in the individual names.
Yeah, absolutely.
Another interesting thing I heard that I want to touch on is the idea of sediment, which is a very popular technical analysis concept, but you believe that it's a short-term only phenomenon. It isn't really useful for the long term. What do you mean by that?
Well, you look at any standard sentiment indicator, and you look at the time over which it's measured, and you look at the top highs and lows and all that sort of thing, and they're always, within a number of weeks or maybe months at the most. To me, that's not short-term in the sense of trading, but it's certainly not long-term investing. So it's kind of an intermediate thing. And you do use it. I mean, obviously, when you're looking at longer-term things and you come up with a signal, let's say that the longer-term market is having trouble, you go and you look at your sentiment to see if that's confirming that, or maybe you're trying to pinpoint it more closely. But it's all short-term. Using to fine-tune the long term.
Okay.
Yeah.
One final question I wanted to ask you. I'm a relatively young guy in the MTA, and I love coming to the annual Symposium. I think it might be the biggest value of being a member of this organization. You get to see all your old friends.
Sure.
Have you? Is that a sentiment you feel as well?
Oh yeah. Well, that's how the MTA was formed originally. Was to to have all professionals gather together and throw stuff back and forth, and new ideas or things that were happening, and it's been a very successful formula.
It's still true today.
It is true today, and in some ways it's better today because you got new people coming in that don't know anything about it or know very little about it, and they get exposed to what has gone on behind, and they get the experiences of some of the professionals and so forth. So it's educational as well.
Get to meet the legends like you. Thank you very much, Charlie.